Alright, this is the second video about the Great Depression. This is now focusing solely on the stock market, as I've mentioned before. First off, there are two types of stock markets. There is a bull market. Bull market, as you can tell, is going upwards. This is continually upward going prices, return on value. This is when you want to buy in the stock market because it's a good return on your investment and everything's going to be fine. The opposite is called a bear market. Now, a bear market is declining, and much like a ravenous bear has been woken up from a deep sleep, can eat and take everything out of your household. Okay, you don't want to buy in a bear market. Now, everybody wants to get in the stock market. However, the market is dependent on your money. So at this time, they were relying on something called margin. Margin is you're going to only put a certain amount of money in the stock market. You're only going to pay off your loan a little bit. So if your loan was $100 to get in the stock market, buy this bond to get in this company, then they'd charge you 10%, so $10. You're confident, their broker's confident you're going to make that $90 plus, and they allow this to happen. Now, as that maintenance margin continues to decline, they're going to ask for more money to keep it above where they need it. If it drops below that margin, they go to something called a margin call, which I'll discuss more in detail here in a minute. But that's how the stock market works. A little bit of time, keep the money where it needs to be, and move. Now, the other thing is the stock market is a difficult game to get into, and so everybody was basically relying on what was called speculation. Now, speculation is just basically a guess. That's something that's going to do well. And this goes back to the brokers and them saying, okay, this is a great company to get on. They're going to give you a lot of money on their investment. They're a cheap stock, etc. The problem is with that, it's risk. Speculation is risk. So you could either lose all your money or you could come out filthy rich. It just doesn't really, it's not really important on the fact of that, but so much more that you have these things going on, okay? Now, at the same time we have unregulated stock market, we also have unregulated banking, okay? There is no deposit insurance in the banks, and there's nobody telling these banks what to do. So they're just like everybody else. They want to make money quick. So what are they doing with your money you're putting in the bank? They're actually putting it in the stock markets as well, thinking that they could help themselves out, etc. Okay, and that's a bad idea. Now, like I said, if the maintenance margin drops, your broker will come to you and go, it's a margin call. That means you have to pay back your loan in full or deal with the consequences, okay? So at this time here in the 1920s, the market's going up, everything seems to be fluctuating, everything's fine. But in 1929, there's a margin call. The money has kind of run down, okay? So people kind of panic. They run to the bank to get their money out. But what do you think they found? The money is not there. It's been put into the stock market. So how are we going to save this floundering stock market when the banks don't have money? And that was the big problem. Because on October 29th, 1929, the stock market officially crashed. That means there is no money whatsoever to help this maintenance margin, and the stock market is kaput, and all the money that was in it is now lost. So the banks have lost money, you've lost money, the companies have lost money, the country has lost money. This is a very delicate thing, and within a matter of months, thousands of businesses and thousands of banks, millions of people are without jobs. And this takes us into quite possibly one of the roughest times of our country's history. We call it the Great Depression. The Great Depression lasts from 1929 really until about the mid-1940s. And even though someone might tell you that the New Deal solved the Depression, that is wrong. It didn't. The only thing that got us out of the Depression was World War II. And those markets that were available, creating money and creating jobs to fight the Nazis and the Japanese. We'll get more about that in a minute. Now, the next segment of videos are about living in the Depression. What was the Depression like?